Wait and see. You know, when you can't predict the future, that can be a good strategy. But wait and see isn't always a good strategy when it comes to your retirement. In these uncertain times, the decisions you make today regarding your savings and investments can have a huge impact on your retirement. Phillip Statler and the team at Statler Financial have seen the market at its highs, its lows, and everywhere in between. They know how emotional it can be for you right now. So here's what they're doing. They're clearing their schedule to talk with you on the phone or on a video call to listen to what concerns you have and then offer help. The number to call is 863-285-3815. They are local and independent advisors who can help guide you through this. Call Phillip Statler and the Statler Financial team now. 863-285-3815 and schedule your time for a phone or a video meeting with the team. Call 863-285-3815. That's 863-285-3815. Investment advisory services offered through Statler Financial Services, Inc. Investing involves risk, including the potential loss of principal.
Look like more what money really means to you. Because we're eminently prepared every morning at this time. It is time to double check and see what your retirement accounts are doing to you this morning. And we do it every morning with the assistance of Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, I didn't realize I had a short record on, so we kind of threw ourselves on the air in a hurry. Good morning. How are you?
Good morning. How you doing? Well, I had a little tire issue this morning, so I'm stuck at home right now till I get my air compressor going and get her pumped up and ready to go.
Oh, Lordy, what'd you do, run over a nail like I do all the time?
I'm hoping not. I think maybe just got a little slow leak in one of my tires. It takes a little while for my compressor to get up and running.
I hear you there. Well, setting the table for the morning, yesterday was an off day on Wall Street. The Dow actually kind of took a bit of a bath, down 324 points. That's the better part of a full percent. NASDAQ was off by 19, and the Standard & Poor's was off by a little under 21. Not exactly a great day, but then again, we've been kind of disappointed by the economic reports that we've had out, so not to be unexpected leading into employment weekend, because we got the first-time jobless claims this morning, and what a concept. We actually did what the market expected us to do for a change.
We really did, Dave, which is nice to see. We saw first-time claims drop down below 400,000, which is good. Came in at like 385,000, which was exactly what everybody expected. And it looks like they revised last week's down a little bit because it was over 400, I believe. It was 399, which is not much of a revision, I don't believe.
I think we were pretty much even 400 last week. So, yeah, a little bit downward, as long as the revision's downward. Continuing claims were kind of a surprise, and my bull crud detector started going off. Continuing claims, 2.93 million. The market expected 3.25 million continuing claims. I'm kind of wondering if we're starting to see some of the fallout from some of those state governments that said, nah, we got to force people back to work and throw them off the federal supplemental programs and whatnot. I'm wondering if that was the reason. I'm hoping it's not, and that's really a good bit of news.
I also agree with you there that we don't, how many people are just getting tired and just giving up looking for a job, though there are plenty of jobs out there. So it's hard to tell. Again, we'll continue to watch and see how continuing claims continue to fall. But tomorrow will kind of be the big, kind of the big tell, I guess, because the unemployment rate will come out tomorrow.
Absolutely. We've got two conflicting days now with reports giving direction. The unemployment claims report we get for this week actually looks pretty doggone good, but the ADP number showing private sector employment came way disappointing yesterday. So it kind of gives us a little bit of a hinky feeling going into tomorrow morning. I wonder what it's going to end up resulting for the day's stock trading.
Yeah, it really kind of makes tomorrow a crapshoot, doesn't it? I mean, you got one this way, one that way, and we'll have to see what the non-farm payroll number comes out to tomorrow.
Absolutely. It's going to be an interesting thought. It kind of has us all sitting on a little bit of pins and needles. Market news that are out there down the line. We've been poking fun for a long time at the meme stocks. I call it the Reddit gang. They trade through a company called Robinhood, and Robinhood went public over the last week. They started out kind of flat, but boy, yesterday they turned into a meme stock on their own, didn't they?
They really did. They were up, 50% yesterday. closed at like $70.39, but they are trading down a little bit today, Dave. Here's the deal with Robinhood. They have to, when insiders want to trade, they have to make a filing, especially if it's a big number. And so it looks like that the insiders want to sell almost 98 million shares over some time period coming up here. And so, shareholders that just bought it, they're not real happy about that. And so it's trading down about 6.5% to 7% this morning. It's been down as low as 11.5.
I can see it happening. They end up getting fat by running it up on the Reddit board, and now they're all honked off at the insiders wanting to get fat, get the money, and run. And now the Reddit board is going to turn to dump this turkey.
Yeah, we'll see how that plays out because, your friends can become your enemies real quick.
They've kind of proven to be that every once in a while on that meme stock syndrome. And what goes up can go down real fast when you get the social networking people honked off at you.
Absolutely, that's the truth. We've seen it, time and time again when it comes to some of those meme stocks.
I hear you. Earnings season continues, and one of the ones that I noticed, and we were talking about it before we went on the air, Uber. I was showing that they'd lost $509 million last quarter, but that was a big improvement over a year ago. You've got the report. How are they doing?
Well, it made me think maybe I'm not sure because, sometimes these tip sheets can be wrong when you start reading and digging in. My sheet actually showed Uber with a surprise profit for the quarter of 58 cents a share compared to a loss of 51 cents a share. So revenue beat as well as some other things, but it really put the stock under pressure from just a couple different things there, investments. And so they're actually trading down this morning, which was kind of surprising when you and I got on the air. But they're down 4.25% to $40 right now.
Begins to sound like maybe we're getting conflicting stories out of the tip sheets, and the investors don't know what the Sam Hill to do with the stock either right now.
It seems to be that way. At least, given what you're telling me, that's we'll have to continue to watch that one and see if there's a correction that comes out somewhere.
Yeah, I hear you. What else have we got for an indication today?
Well, we've got. Let's talk about another kind of one that's losing some steam, and that's Etsy. Etsy was a flying high stock during the pandemic because people could do their craft or hobby and sell it right on Etsy. And so it gained a lot of market steam and they made, they came in 5 cents ahead of estimates. They earned 68 cents a share. So that was good. Revenue came in above forecast. But the stock is under pressure now because of the looking forward, the expectations of growth fell way short of what everybody thought they should be looking at there. And so this morning they're trading down about 11.5% right now. That's a pretty big number, down $23 a share. Right now it's at about $179 a share given right now.
Yeah, that's kind of starting to look like some of those shifts you and I have talked about over the years for strategies. Strategies change based upon circumstances. We were noting a shift from growth stocks into revenue stocks for a little while in there back a couple of years ago. Now we're starting to look at the shift from pandemic-related stocks to more blue chip and safer investments now as the retail climate seems to change. A lot of those, ride sharing, mail order, internet revenue stream businesses are starting to get a little bit of pressure on them this earnings season, aren't they?
Yeah, they are. They're having to show that, well, they're more looking at guidance going forward, right? What's it going to look like going forward in all those type of things. And so that's a big deal. I do have a couple, let's say some good news here. Wayfair reported, the home furnishing seller, they came in at like $1.89 a share, well above the $1.15 they were expected to make. They also had $3.9 billion in revenue for the quarter, well above pre-pandemic run rates, which is always a good sign when your revenue gets above what it was before the pandemic. And so they're up almost 2% this morning at $255 a share.
Cool. Yeah, if you can beat what you were doing before the pandemic hit, that's good news.
It really is. Then I've got two more for you. I got Roku reported. They're very popular, the streaming service. They had weaker than expected user growth. They didn't add as many people as everybody thought they should. They did report better than expected earnings for the last quarter, but that was the last quarter. Everybody's looking ahead now. They made 52 cents a share compared to 13 cents they were expected to make. Revenue was well ahead of expectations too. But again, that forward-looking forecast is putting some pressure on them this morning. They're down a little over 7.5%. Now, all these stocks are getting high price. They're like $388 right now.
I was kind of wondering what was going to happen to Roku. They kind of got into a spitting match with Google over some of Google's and YouTube's apps running on the Roku box over this quarter, and made YouTube cable TV a little harder to find for new users. I was wondering if that was going to cost them anything.
Yeah, so it seems to be putting some pressure on new users anyway. The last one I have for you today is Fastly. Now, Fastly may not sound real familiar to anybody, but they are a cloud computing software company. And they were the ones responsible for earlier in June having that widespread network outage that affected a lot of the folks that we deal with. And so that's a big deal for them. They lost 14 cents a share second quarter. That was 2 cents better than expected. However, that issue that they had is going to weigh on them for the ongoing quarter and maybe even further. And so they're our big loser this morning, Dave, down 22%. They closed yesterday at 44.50, and they're going to, right now, they would open at $34.80, down almost 22%.
Good Lord.
Actually, you know what, Dave? That'll be a new 52-week low for them.
Well, nothing like having half the world going after you with pitchforks and torches after. I feel sorry for them for the moment. Resetting the table, down day yesterday, pretty much across the board, 45 minutes before we opened this morning, Phillip. What are we looking at?
Right now the indexes have some green ink. Nothing crazy, but at least it's green ink. We've got the Dow Jones up a little over 0.2%. That's $75. We got the S&P 500 up about 0.2. That's getting about $8.50. And we got the NASDAQ up not quite 0.2%. So everything's in the green, not hugely in the green, but at least in the green. And then the commodities, we have a pretty much green ink also. Silver up a little over 0.1%. Gold actually just went, it just went red by less than 50 cents an ounce. And crude oil is heading up today. It's up 0.5%, but Dave, it is below where you and I talked yesterday. It's at $68.50 a barrel right now.
That's intriguing. And we were talking about production restrictions coming out of the OPEC people trying to support the price. It ain't working, is it?
No, it definitely doesn't seem to be anyway.
Yeah, it doesn't sound like it. Overseas markets, we had a mixed bag pretty much both in Asia at the close and in Europe this morning. They don't know what to think about what we're doing over here either, so they're all mixed up as well. It's just little movements either side of the zero mark for the most part. Phillip, different ages, different levels of risk levels, different strategies that a person needs to plan for their retirement. If you haven't been to an advisor in 5 years, you probably are looking at the wrong strategy for your retirement. How do I find you to find that strategy?
Absolutely, Dave. That's important that we know how much risk we have. The closer folks get to retirement, the more important that becomes. Give us a call at 863-382-0037 to schedule your financial x-ray. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30.
Good information just about everywhere you look for it from Statler Financial Services. Phillip, thank you much, and we'll see you tomorrow morning, all right?
All right, man. You have a great day.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
You toss a penny over your shoulder into a fountain, and you make a wish.